NGX All-Share Index shed 1.4% last week, with the consumer goods index taking the biggest hit. And so far this quarter, the banking index has been the worst hit, down over 18% in the second quarter. Now, higher yields in the fixed income market is driving sell-offs. But let's find out if this week will be more of the same as the Monetary Policy Committee begins its two-day policy deliberations. Mukhtar Mohammed, analyst at Assar Investments, joins me for this discussion. Mukhtar, thank you for joining us today.
Thank you, Esther.
Well, let's get right to it. The market appears flat, but of course we know that we have seen more investors headed to the fixed income market for obvious reasons. We're seeing higher income, higher yields there. But more importantly, the MPC meeting began today, and of course there will be a decision tomorrow. Talk to us about what investors' expectations are, and also yours, in terms of will there be a hike, will the MPC hold, and how this could potentially impact the market.
Thank you again, Esther. For the MPC, it always has its impact in the market, especially for the first few days, sometime week, and you see that impact, especially in the financial sector. I still expect that to happen. Unfortunately, it might not happen like it used to happen before now, because it's like the financial sector is already down since that they are pricing in the MPC already there. And remember that this sector started suffering this much since the CBN recapitalization plan was made known to the market, and up to this moment, the CBN has not come out to tell investors which banks' plans have been accepted. For the MPC meeting, I expect a hike. I mean, especially where they see that small reduction in terms of inflation month to month, you expect that it will be high. Whether it will be 200 basic point, I don't know for that. I expect for it to be like 100 basic point, because a lot of traders or businesses are really suffering from high funding, and then the banks may start suffering there in the area of non-performing loans. So I don't expect that hike to be too much. Thus far, has the policy really have any impact? Esther, I don't think so, because for the past 18 months, we've been hiking, we've been doing copy and paste, like what we started this race with America, we started it with the UK, we started it with some EU, we even started it with Kenya, an African country. And at this moment, those countries are gradually beating down inflation, and our own have kept going up until where we are now. So
right.
It shows that something's fundamentally wrong.
Well, if I could just come in here, I mean, we know that one of the reasons why currencies, especially in sub-Saharan Africa, remain under pressure is because we're still seeing higher for longer interest rates in the U.S. The Fed, is still holding back on cutting those rates because inflation, of course, is still sticky. We're still seeing higher gasoline prices. But for our CBN governor here, obviously, it's a very tricky balancing act. We have seen, like you said, the hikes, and there's, of course, the forecast is for either a 100 basis point hike or a 200 basis point hike. That being said, the Naira continues to be under pressure, and what we're hearing is that until there is an assurance of inflows to come into the market, the currency will continue to be under pressure. The CBN will be forced to continue to hike. But for companies on the listed or quoted on the NGX, where does that leave them in terms of? There was celebrations, many companies, individuals heaved a sigh of relief when we saw the Naira strengthening earlier this year, but we're back where we were before, 1415. So where does that leave these companies? Because I'm looking at a company like Cadbury Nigeria, which is converting an outstanding loan of $7.7 million to equity due to difficulty in sourcing dollars to pay its foreign currency loans. Where does that leave quoted companies exposed to the dollars on the NGX?
Well, definitely, it leaves them in a bad space. That's what we have seen happen to a company like Cadbury. Cadbury is lucky to have been able to convert his own into share for his own investors, but other players like MTM, like Airtel, they are not as lucky as they are. So definitely, we'll see those numbers impact again the manufacturing sector. But it may not be like what we've seen in the year-end result, because some of these exchange rate at year-end was tracked between 1,700, 1,600. So you could see the FX losses, a reduction in the FX losses, especially in company, the brewery sector, like Nigerian Brewery or Guinness. But it might not be as high as we thought, the losses. But again, the gain might just be marginal because the exchange rate is still very, very volatile.
Right.
Attracting FX into the exchange rate, I mean, to the market has not been successful thus far because of instability, because no investor wants to come to your space when
Right.
there's no stability there.
Well,
So definitely, I think there's still a lot of work to be done by the CBN, especially if they are able to bring down the
right.
exchange rate, because then we'll see the inflation naturally go down. Because I feel the fundamental issue of Nigeria is the
Right,
exchange rate,
Mukhtar,
not just the copy and
if I could
paste.
just come in here, we have just 1 minute left. I wanted to just, talk about, outlook for the week. What are investors buying this week? What stocks you have on your radar?
Well, I think investors will do what I call sit down look, and then start the MPC. They will begin to look at stocks to buy. I still think they will still see value in this in the tier one bank and the tier two banks. Investors are seeing value also in Nigerian Brewery, and they are also seeing value in MTN. I think investors for now are being careful with the manufacturing sector, especially the conglomerate. But I think they are seeing value in terms of price entry and thinking of holding on for the long term, not really because they think capital appreciation will happen anytime soon.
All right, it's certainly going to be a bumpy ride for investors going forward. But thank you so much, Mukhtar, for your thoughts as always. We appreciate your time on the show today. Mukhtar Mohammed,
Thank
analyst
you.
at Assar Investments.